Let me see. Okay, welcome to the stream, guys. I'm gonna do a quick recap of what happened last week. I'm gonna look at a broader view on the daily chart, what's happening, why we went down. I know it was because of the tariffs, but it had to come down because algorithm. And then we're gonna do some weekly outlook for tomorrow, upcoming week, what we're gonna do, and all that stuff. So instead of making a video, I thought I should just go live. It's easier because it just saves video on each platform that I'm going live on, and I don't have to do anything about it. Okay, looking at the charts here, it's NASDAQ micro. Same chart, it's just a micro chart that I've opened. So I just pointed out a few stuff here and there. Looking at it, this whole area is the last year's April, May, June, July, entering into August, which seems like similar to what we got this year. Going into April, we went down and then went up. Here, same thing, we went down and then we went up until May. We are all up. And here as well, if you can see, we were up in May. I'm pretty sure we'll go up here until June. July, maybe there is a retracement. July, August, September. I feel like when we take this objective, we'll come back to this area over here, which is the weekly equal lows. It's a far-fetched story, but too far for now, but that's what I think. But the closest target is this. Clearly everyone knows that we have to go there, so I'll just zoom in here. So we have equal highs over here, which align with the weekly equal highs. We have a daily BC here, CB here. The chart went down, took out these equal lows over here, came back, and I'm pretty sure it's going to take out the equal highs this time. We have a small gap that is still open over here, a gap over here. So what happened? Let's go into 4 hour. Okay. So looking at the previous 3 weeks over here, you can see we coming into the last week, the third week, we took out the high, the low and the high, and then we made another high. We came back down, and we took out the previous week high, and I feel like we're gonna go into this inverse fair value gap and take out this previous week low and then go up again towards the weekly equal highs over there. Just respect this daily CB. So for now, what I'm thinking is that we are already in this area. This is a balanced price range over here, as you can see. Do I have a template? I don't think so. Okay. This is the balanced price range. I'm pretty sure the price does not want to go in there, but anything can happen. We are observers and we can change our narrative based on what the charts present to us. So I think this is what's gonna happen. We are in the breaker. We'll go back into this fair value gap, touch it, and go down. Go down, touch it, go down towards this BC. A little bit of retracement. We'll take this previous week low and then go back up. That's what I think. So opening into Sunday, when it opens, I feel like it will just go up here, touch the balanced price range, and then Monday, Tuesday, I can see lower prices. But I have to see if on Monday or on Sunday night, on Tuesday, if it goes above this area, that means that we are bullish and we're just gonna go up without taking out this low, maybe for next time, because this will constitute equal lows over here that I was also looking at, so you can see. So previous week was simple. Took out the low, took out the high, made new equal highs, took out the previous week low again, went up, took out the previous week high, and left the previous week low again. So this was classic market maker model from ICT. Made two equal highs, go down, take the lows, come back and take the highs. If I was not looking at the chart so much last week, so if I had, I would just take a long here and leave it. But it's okay. We see opportunity every day. What else? Let's go down and see the potential trades that we could have done each day. Let's go down to a 15-minute chart and go on Monday. Monday. This is Monday. I trade 9:30, so we can see the potential trades. Okay, let's go down even more. Go to a 5-minute chart so it will be more transparent. Friday, Thursday, this is a Monday over here. We took out these equal highs, almost relative equal highs over here. This high and this high, we took them out. If I was sitting here, I would enter around here on a 1-minute chart and target these lows. This could have been a good trade. These lows, because I don't target a lot of points. I usually target 20-30 points. We could have waited for it for the PM session go down, but that's too late for me, at least. I usually trade on a 1-minute chart, so here when it closed around here for this new fair value gap, I would just put my stop here and then target this nearest low. A good trade for Monday. Then on Tuesday, we see price go up, take out the highs again, but at the time when we entered the market, I don't see any trade. I see here break of structure, maybe on a 1-minute chart. So what we can do is we come back to this chart on a Tuesday. And see what's happening. Also, I always utilize the first presented fair value gap, always, and when it makes an inverse, I enter most of the time. So let's see, this is 9:30, whereas this is the first presented fair value gap. I would have entered here. I didn't trade on this day, but I would have entered here and targeted this high over there, no matter how many points, because it would have been so easy to just target it. I would not wait for it to come back. I'll just press buy and put my stop here, because I'm pretty sure it does not go down from there. This, you can also lose money on this, but you can make a lot of money on this. So 5 days you can win 2-3 times, max 4 times on this trade. The thing is, with the right risk to reward ratio, you'll end up in profit. Okay, let's go to Wednesday. Let's go to Wednesday. So what happened on Wednesday? These past days I only traded London session. I was not too keen on the AM sessions, because London is a bit of easy session to take. But let's see what happened. 9:30 opens. Look at that. Disrespected the first presented fair value gap. And as I told you, I would just enter, press sell here, put my stop above the one that made the fair value gap, and then target the nearest lows. These ones. Beautiful trade. When you do these kind of back testings, you see that how powerful the first presented fair value gap is. This first presented fair value gap was just introduced by ICT this year, and I've been blown out. I love it. I've been using it for a lot of my trades. Thursday, Wednesday, this is Thursday. Thursday. Okay. So on Thursday, we would have missed the entry because it never came back to it. But if so here's what I think when there are things like these, you know. I see that we have a clear target down there, and we have taken the previous highs. We're just making break of structures again and again, but we haven't reached this target here. So to do a winning trade, normally what I would do is I can, as soon as I see the first presented fair value gap, where is the first presented fair value gap? This would not constitute a first presented fair value gap, I suppose. It has to be inside of a 930 window, which would be this gap. This gap over here. Now I'm seeing that the price is going down and down and down, so it makes sense that if we don't see an inverse, we should enter. Again, we should always target the low-hanging fruits, which are these lows over here, so we can just make a good assumption of taking a short here, put our stop on the recent high, target the low-hanging fruit, which is this nearest low. Again, a good trade. Of course, I normally put 20-point stop. Even if I know it's not gonna go up there, I still put the 20-point stop. So based on the first presented fair value gap, is still a good trade. Some people would say, okay, this is the first presented fair value gap, to which I say the one candle is behind. But let's suppose they say, okay, this is the first presented fair value gap. Still, if we are extremely bearish, so here is the idea. Look what happened. We took out this high, okay, we made a change in state of delivery here, and we made a fair value gap, and it happens to be the first presented fair value gap. So what I would do is I can take a trade here and target the low, this low. This would be a great trade. Look at this. It's really hard to look at this live when the market is playing out. That's why you have to go back in the charts and see, oh, this happened, I should have taken the trade, like I am doing right now. I am just looking at the chart and telling you guys, okay, this is a good trade, this would have been a good trade. Me personally, I didn't take it, but that's the whole idea of it. You go back, you look what happened, and then when you come to the live charts, you can see it in hindsight that, okay, I'm looking at it in hindsight, and this hindsight helps me in live trading, that okay, I saw it play out like this the other day, so I think it can play out like this now. So going back to the charts helps. You can see, okay, where you made the wrong call or where you did right. So that was Thursday. Let's go into Friday. This is Friday, 9:30. Let's see what happened. I was bearish on Friday anyway, so I saw this. I think I traded last night on Friday, so I didn't trade on Friday morning either. But looking at this, I would have taken this trade. Honestly, I'm not even joking. I would have put my stop here here because I don't actually go too much high. And then I would have just targeted the nearest low-hanging fruit, which is this. That would have been my trade. Now that I look back at it, I'm like, oh my god, bro. This is crazy. Or look at this, we could have taken this trade, which is a better RR. Okay, I'll try to trade the morning session again because this is crazy. Anyways, this is how the week looked like. It was fairly easy to trade. I didn't trade the morning session, but it looks like it was really easy to trade. And then of course the upcoming week we see it pan out like this. Where is my here? I feel like it's gonna go up like this. Disrespect this, change of state of delivery, go here, take out the previous week low, and then boom. This is one thing that I feel like will happen, and the other thing that can happen is this. So these two scenarios can play out. Let me make it better, more understandable. Go up here, touch it, go crash it here, touch it, go up. These are the two scenarios that I feel like will happen, but we'll know about that on Monday. Overall looks good. My draw is still high on that weekly equal highs, pretty bullish, but I'm also a little bit bearish looking at the chart. So I'll just snap this picture, post it on my social media. Yeah, looks crazy, looks good. Okay. Okay, I hope you find this insightful, and I'll make another video again for the strategy that I'll be doing, and maybe do a backtesting session on the strategy. I'll try to choose one for the upcoming week, and then we'll do some backtesting on that strategy so we can go into the week confident and hopefully follow our strategy and our plan and discipline and consistency, not doing more than 2 trades a day and all that stuff. But that's about it for this. Thank you.